Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and in this occasion I come here to speak and give you the last update in relation with the coming inflation rates in United Kingdom. What is the expectation? What is the nature of this indicator? What could be the main factors moving under the inflation rate in United Kingdom? And of course, the main 1 million question is what's going to happen with the monetary policy in United Kingdom and how that's going to affect the pound, the Forex market, and also the equity market, the stock exchange in London. Now, going into detail, before we jump into the presentation, remember, click on the subscription button, click also on the bell to receive notifications anytime we update market new comments, and follow us if you want to keep updating this in relation with this topic. Now, let's go to the presentation. UK inflation, basically a quick review on what could be the main factors behind the inflation in the United States. Numbers are numbers, so let's start with the numbers. 3.6% on CPI annual rate, 3.7% if we take a look on core inflation, not only in the standard one, but also the core inflation. And between those factors to compose inflation, services is still one of the top ones, 4.7% of inflation in service prices. Why I highlight service? Not only because it's one of the top ones, it's also because service sector is mainly workforce, labor force, which means it's really related and very close related with the labor market and unemployment rates. So if the inflation is rising here, it means like you cannot correct or control that inflation without causing unemployment rate rising. If inflation is caused by service sector and the service sector is mainly fed by labor force, it means like by failing people is the only way you can cut the inflation rates, which is a conclusion that not everyone wants to analyze, right? 3.7% standard inflation, 3.7% core inflation. That's far away from 2% goal from Bank of England. They supposed to cut the interest rates only if the inflation rate is below 2%. And that's not the case. And therefore, it's giving us clear indication that Bank of England is not going to move or any step forward in the direction of the interest rate cuts until they will be 100% sure that inflation is gone. Now, retail sales and customer behavior. This is a super important factor also because obviously if inflation is rising, one of the main factors of inflation is also the behavior of the retail, of the consumers, of the people in general terms, right? Families. If the consumption is still strong, if the retail sales are still rising, and we got those numbers there, has been 0.9% in the last period of June 2025. Retail sales are gradually recovering but remain 1.6% below pre-pandemic levels. Still weak but recovering period after period and improving since the last year. We are comparing from Q2 on 2024 to Q2 on 2025. And obviously we can see that doesn't seem to be a weak market. If retail sales numbers are going well and it rising, it means that the UK economy is still showing us a strength and therefore doesn't seem to be an indicator again of an inflation under control or dropping in the coming periods. No, if retail sales are strong, it means the inflation gonna be probably at least stable there. Housing market and interest rate dynamics. This is very interesting point too, because we also see that average price of house is still remaining around £270,000. But it's also true that the price seems to be dropping. Interest rate trajectory has been, Bank of England has been cutting the interest rate since last year a few times already. We are right now at 4% on interest rate reference, but still the average mortgage cost, standard variable rate, SVR, is around 7.6% in August 2025, which is causing the house market also getting slow and weaker than we were expecting. The house market shows resilience despite affordability challenge beyond by growth and recent easing of interest rate. However, month-to-month volatility, including April 2.8% monthly decline, signals on the underlying uncertainty, which is another factor that we could consider. And the last thing I'm going to give you in terms of fundamentals perspectives to feed you from a macroeconomical perspective, not only the charts we're going to review at the end, but also get a a clear understanding of the situation from an economical perspective, I want to contrast Bank of England position, Bank of England view against the government of UK view. It's completely different for obvious reasons. The government of United States want more aggressive monetary easing, of course. Bank of England still want to be more conservative, cautious approach to rate cut despite political pressure. Government in UK is pushing the Bank of England to cut the interest rates. Bank of England is insisting we are keeping on hold until we'll see clear trajectory of inflation. Emphasize need to support economic growth and housing finance. And we can see from Bank of England projection temporary inflation rise to 3.7% before gradual decline. In general terms, what we can read here is the government is more optimistic. Bank of England is more pessimistic in terms of inflation. Bank of England is still considering that inflation could be a problem. It's not still gone. We are far from the 2% target. It doesn't seem to be a clear trend. One of the indicators, now talking about charts that I shared with you on very similar report we did on US inflation a few weeks ago. It was I was sharing with you the Baltic Exchange Dry Index, which is one of the index that I believe is one of the best indicators for future inflation. Back then, a few weeks ago, I was showing to you this, indicating a bullish trend on Baltic Dry Index, showing how the increase of the cost of shipping goods or products over the seas, it was rising. Exactly very similar pattern that we've seen in 2021, predicting the inflation of 2022. Well, I was right, because this is the chart now done for UK inflation report I'm doing right now, and you can see that actually the Baltic Dry Index was actually rising. So yeah, it was a bullish pattern with the tech we shared with you in the previous reports, and it was right because you can see before and after. Now, talking about the movement of the prices on Forex market, on cable, on GBP USD, what we can see is eventually if the monetary policy of the Bank of England is conservative and still hold the interest rate, which I believe is something they're going to do, and at least something really change. We mentioned that retail sales are strong. We mentioned unemployment rate still seems to be optimal. We also mentioned that growth rate in United Kingdom has been weak last year, but it was getting certain improvements, and therefore I don't see any urgency, especially with the top record also on the market on FTSE. I don't see any urgency to cut the interest rates right now, and therefore pound should remain strong and stable against the dollar. That's why our chart is showing to us what it could be interpreted like a ABC movement at the end of three impulsive movements on the top that drop against the pound, but so far I don't think that's the scenario. We probably could expect the pound getting stronger and challenge even 1.38 level on cable, unless the dollar becomes strong. That's why I said also the dollar charts. We can see the dollar losing the support of 100 points on dollar index. If that support is not recovered, obviously the pound cable is going to remain on the current level, so even going higher than those levels. So again, if this chart DXY is not moving backwards, we could expect the dollar remain weaker in relation with the rest of the currencies, and also the pound remain stable. But again, dollar and pound are following very similar monetary policies, with holding the interest rates, and that's why is a kind of pulse between both currencies. And finally, the stock exchange in London, FTSE 100, shows a really bullish trend and strength. So I believe even in worst case, if we see the market is dropping, we still got 8,850 points as a support, clear support, and therefore in that case, probably we could also receive some stimulus from Bank of England, cut the interest rates to give, boom, again, a stimulus to the stock exchange. We got enough ballots from a monetary policy perspective to stimulate the equity market in UK, and that's why I believe we can see the market still moving forward. That's all. I hope you enjoyed this report, and again, remember, if you like it, thumb up on this video and leave your comments for the coming new one reports. Okay, take care. Bye bye.